Hello and welcome back. Jeb here. So over the last couple of months, we've been talking about the housing market being on a tear. In most markets, housing has gone up 10, 15% in some cases. And we've talked about the only thing that could change the housing market with regards to home prices would be either more supply coming to the market or a rise in interest rates. Now, we do know that supply is currently being manipulated by the government because there are moratoriums on foreclosures, and we also have mortgage forbearance in place allowing people to miss their mortgage payments. Now, even with that taken into account, I firmly believe that if those properties were to come to the market, we still would not have a balance between buyers and sellers. It would still be a seller's market, but the key here is that there is a huge lack of supply, but at the same time we have very, very low interest rates. So those low interest rates are really the key driver of the housing prices going up so much over the last 12 months. Because even coming into 2020, we had a shortage of inventory. We came into that year with a shortage of inventory, and the year kind of started off pretty normal. And then when the pandemic happened, things shut down, interest rates were manipulated, if you will. Coming out of that, with all the changes in people being able to work and migration patterns and what have you, that created this frenzy within the housing market, and home prices have just shot up since then. But over the last couple of weeks, 3 to 4 weeks here, now we've seen interest rates climb from their lows, somewhere around 2.75% up to 3 3/8 or so, depending on what type of loan you are getting. FHA and VA rates are lower than that, but conventional rates are somewhere in that ballpark. And since yesterday, when the Fed came out and released their statement, interest rates today have climbed, an eighth of a percent since yesterday. So interest rates are up an eighth of a percent since yesterday, which may not seem like a lot, but on a $500,000 mortgage, that's about $35 or so. So you take that eighth plus the other half a point or so that rates have gone up since the lows, and you're talking a couple of $100 per month in mortgage payments going up on a $500,000 loan. Now, you ask, well, is that what is going to slow the housing market? And my honest answer is it's hard to say. I do think rising rates are needed to some extent to calm the housing market. And now, before you guys, shoot me and write in the comments that I'm crazy to have rates go up, but understand we're on a complete frenzy right now in the housing market. And what I mean by that is homes are selling at a faster pace than I've ever seen in my 18-year career, at prices above the asking price that I've ever seen in my career. And something has to give here, because you can't have homes rising at the rate that they're rising and the market stay, the fundamentals stay within the market, because it's getting out of control. I mean, as a real estate agent, I'm surprised on a daily basis when somebody tells me what a home sold for. I mean, an example is a property yesterday. We wrote an offer on a $750,000 home in a local city here, and $750,000, when I looked at the comparables, was what the house was worth. There wasn't really a comparable to support much more than that. My clients wrote an offer at just over $800,000 with the idea that it may not appraise, and they were okay with that, but they wrote it at $800,000, which was $50,000 above the asking price. I got word today that 2 buyers came in and offered $850,000 for that home, waiving the appraisal contingency, waiving things in order to buy that property. $850,000, that's $100,000 more on a $750,000 home. Right off the top of my head, what's that, 13% or so more on that property than what it was listed for? And now keep in mind, that becomes the new comp in the area. The new comparable sell in that area is now $850 because that one property closed. Now, that doesn't mean that that's the only comparable that appraisers are going to use, but that's going to give people the justification they need to now price their house at somewhere around that number. And then that becomes the basis at which homes continue to climb. Now, no offense, but that home isn't an $850,000 home. It's you know, I've always said a home is what somebody's willing to pay for it, and I completely understand that. But at some point, things can't continue to climb at the pace that they're climbing, because otherwise, not only is affordability becoming an issue, there are just other issues that come with that. And so yesterday, when the Fed came out and said that, essentially the Fed funds rate was going to stay unchanged, and for the most part, the consensus between the group was that rates would stay unchanged through 2023 with regards to the Fed funds rate. At the same time, they mentioned that inflation was under 2% and, was under control, if you will. Now they announced that, some things on unemployment and GDP that were positive for the economy and what have you. But at the same time, you had bonds go up, right? So treasury prices went up, which caused, because there's still this fear of inflation, although the Fed came out yesterday and said that inflation was under control at the moment and we haven't seen any real rise in inflation, people still have the fear of inflation and therefore interest rates have climbed. Now, is it the fear of inflation that's causing interest rates to climb, or is it the government perhaps doing something to manipulate to get rates to rise enough to slow the housing market? I'm not really a conspiracy theorist type, but I do think there's some play here that maybe the government's using to raise rates up enough to slow the housing market enough so that it doesn't continue on this frenzy. Now, this only works if home buyers out there see the rise in rates, they see the rise in payments, and decide that, they're not willing to pay that price, or they're not willing to go that much over the asking price because of how much it's going to affect their payment. It's really hard to say how all of this is going to play out, but I do think if rates continue to rise a little bit, it will help housing. It's not going to stall housing enough where you're going to see a crash or a huge dip in prices, but what you might see is homes start to sell closer to where they're listed, what they're actually worth, versus going well above the asking price in a lot of cases. And that could be a good thing for everyone involved. Now, I think as more homes come to the market in the spring, typically speaking, and you see this rise in rates, maybe you see the housing market slow enough to allow home buyers to not be in these situations where they're bidding against 20 other people. Maybe in this case, they're bidding against 3 or 4, and they have a better opportunity to get into a property. Really hard to say how all of this is going to play out. Now, while I do think rates are probably going to rise more in the short term, a lot of people that I follow out there are saying the next 2 to 3 months, potentially you could see rates go up. But I think the long-term view is that rates probably trickle back down at some point. I don't think they're going to stay at these levels for an extended period of time, but if they could stay at these levels enough to cool the housing market some, that could be a good thing for everyone involved. Now, again, a lot of this is just foresight or me forecasting what I think is going to happen. But I do think that you're going to see rates rise a little bit, here in the next couple of weeks. How that's going to play out is really, really hard to say, but I think if they rise enough, along with what they've done over the last couple of weeks, you could see a little bit of slowdown. And hopefully, if you're a buyer out there, it gives you that opportunity to not have to overbid or be in this crazy situation. But as I get more information on this, as I get more updates, I will continue to put them in front of you. If you have questions, comments for me, do me a favor, leave them below. As always, I appreciate you taking the time to watch. Appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.